direction of India's trade policy. We run the economy and policy initiative under our public policy vertical, and on behalf of the center, I would like to thank Forbes Marshall for their generous support for this series. We are truly pleased to have with us today our eminent panelists. Dr. Amita Batra, Professor of Economics, Center for South Asian Studies, School of International Studies at the Jawaharlal Nehru University. Ambassador Mohan Kumar, Chairman, Research and Information System for Developing Countries. Dr. Naushad Forbes, Co-Chairman, Forbes Marshall, and Chairman, Ananta Aspen Center. Thank you all so much for taking out the time to be here at this panel and for joining this discussion. Furthermore, we are delighted to have with us our moderator for the session, Mr. E.K. Bhattacharya, Editorial Director, Business Standard, and Chair of the Economy and Policy Initiative at the Ananta Center. As always, Mr. Bhattacharya, it's a pleasure to have you with us. We really look forward to an extremely vigorous and insightful conversation today. And with that, I now hand over the floor to you, Mr. Bhattacharya. Thank you very much.
Thank you, Ananya, for this short introduction. Good afternoon, everyone. And thank you for joining us today for this very special session under the Economy and Policy series, which is called Assessing the Direction of India's Trade Policy. This series, as you know, is an initiative by the Ananta Center, which highlights the changes taking place in the Indian economy, while it is still recovering from the damages caused by the second wave of COVID-19. In today's session, we'll be examining where India's trade policy is headed. While we have done well in exports, reasonably well, but our policies are increasingly appearing protectionist. And this session would look to explore a gamut of issues such as the performance of exports, the future and scope of free trade agreements, and the overall trajectory and direction of our trade policies. I would like to welcome to our three speakers this afternoon. We have with us, as Ananya said, Professor Amita Batra, who is a professor of economics and currently chairperson, Center for South Asian Studies, School of International Studies, Jawaharlal Nehru. Welcome, Professor Batra. Joining us next is Ambassador Mohan Kumar, who has been the chairman of the Research and Information System for Developing Countries, RIS, a leading Delhi-based think tank since June 2018. And he is a specialist in trade, and he has been a member. He was a member of the Indian Foreign Service, and he was our former ambassador to France. Welcome, Mohan. Our third speaker is Dr. Naushad Forbes, who is the co-chairman of Forbes Marshall, India's leading steam engineering and control instrumentation firm. He's also the chairman of Ananta Aspen Center, Bharatiya Yuva Shakti Trust, and Center for Technology, Innovation, and Economic Research. Naushad is on the board of several education institutions and public companies, and has been an active member of CII and was president of CII for 2016-17. Welcome, Naushad. Before I invite our panelists, let me say a few words about today's panel subject. There are five issues that I think we need to really be conscious of, and this is a kind of setting the background or the backdrop, if you will. Exports are rising, there's no doubt about it. But if you look at the latest month's numbers, there is a clear sign that they are slowing down. What could be the reason? Is it only a base effect or something else that is happening? A global markets factor? We would like to know from our panelists what is really happening. Are the exports really sustainable? To have a growth rate of 46% or so. They've already in November, they've come down to 25% growth. And they're actually a 9-month low figure in November. So one area of concern is that exports boom that we saw in the first 6-7 months. Is that something that indicates for the coming few months? That's number one. Number two question is there anything that should worry us in the composition of India's exports that we have seen in the last 6-7 months when exports have been doing well? Is that composition something that tells us about the kind of industries that are doing better on exports? Because that will definitely have an impact on our jobs, employment situation is not too well. So therefore, if we can decompose and try to understand which are the sectors that are doing better, and are there anything to be done to make sure that the composition of India's exports regains the strength that is necessary for the right kind of impact exports should have for a variety of other sectors of the Indian economy. Question number three is a more basic question. Given the fact that India is reportedly negotiating with various countries, various groups for free trade agreements, they're in various stages. What kind of strategy we need to adopt with regard to FTAs? What we have done so far, and what we are doing right now, and what we need to do in the coming months and years, something that should be an engaging discussion. Point number four is on tariffs. Are we doing the right things about tariffs? There are serious concerns about the manner in which tariffs in many sectors have been raised. Maybe it is because of the industry wants it, so the government has really just sort of done something that the industry wanted it. Or is there something deeper that is happening, that why tariffs are going up? And is it the right approach? And what needs to be done to make sure that tariffs don't become an impediment to India's overall growth? And finally, I would say that, is there something that we are missing in understanding the global market trends? This is a post-COVID world. Have the markets, the global markets, India's export markets, are undergoing certain changes, and the approach of different countries to imports from India, have they gone change, and what we need to do to recognize that reality? So these are the 5 broad issues I would say should engage our overall discussion. Before I invite Professor Batra, I just wanted to sort of remind our audience that they must sort of they must prepare for sending their questions, and they can send their questions throughout the session and need not wait until the end. We'll be taking up your questions during the Q&A session after the opening comments made by our panelists, and then a couple of rounds of Q&A with them, moderated by me. We will go over to your questions. And if you're watching this session on Zoom, please use the Q&A portal at the bottom of your screen. And if you are on Facebook, please write your questions in the comment section. Now, with these words, I have great pleasure in inviting Professor Batra to make her opening comments. And if you can just focus on the broad trends, setting the agenda, so to say, on which direction we are moving as far as India's foreign trade is concerned. Professor Batra. You are on mute.
Sorry for making this mistake. Anyway, thank you, Mr. Bhattacharya, for introducing the subject today. And I'll try and give my brief points on each of these aspects that you've set out for us. And I start by making an assessment, as the topic says, of the direction of India's trade policy against the background of the outcomes of trade as we've seen both globally as well as in India, and bring it out here, in terms of the sectors that have done well globally and where is it that India is moving as far as its exports are concerned, and the question of sustainability. I'll be brief here and we'll come back to greater details during the question answer session. What I want to first point out is, that as I am, of course, talking about this is trade in goods basically, and within trade in goods, this is basically manufacturers trade, which is the predominant component of goods trade globally, The first thing I think that I want to point out is that as far as the global trade context is concerned, it is an altered context, what we've seen in the last, and I take a longer term view here, both in terms of reviewing where we are coming from, and where we are going here, and as far as, the altered context that I'm talking about is concerned, in the last almost decade and a half, what is it that we've seen is that the traditional trade has declined, that which was based upon individual countries' comparative advantage with each country producing final goods to be consumed elsewhere, that has declined. And it has really been the rise in value chain trade that has taken predominance, or that has taken the major role in terms of global trade, And it's half of the global trade that's really what is referred to as value chain trade. And that is really about trade in tasks rather than trade in final goods, So that trade for many economies, in fact, for most emerging market economies, it has become a way to acquire specialization and enhance their productivity in smaller tasks rather than in producing final goods to be consumed elsewhere, which was the earlier objective as far as trade participation is concerned. This has been both the means as well as the objective of most countries in participating in global trade in the last decade or so, Countries that have really integrated in global trade, or they've increased their participation, therefore have done it through the supply chain participation, which has really been concentrated, as we see it, in three broad regions. One is the East Asian hub, the other is the North American, and the third is the Western European hub, The Western European having been dominated all this while by Germany. Now, of course, it's also integrated many of the Central and Eastern European economies. East Asia, first by Japan, more recently by China, and North America, which is of course tied down by NAFTA, now having been renegotiated in terms of the US, Canada, Mexico trade agreement, The major sectors that have really been, that have led this entire process of value chain led trade globally, have been largely office machinery, communications equipment, and transportation sectors. Within this, of course, there have also been, in terms of office machinery, that has been led by many, many subsectors within this. Similarly, as far as communications and telecommunications are concerned, So subsectors within this, but majorly these have been the lead economies that have had the highest percentage gains in these sectors have been basically China, largely in office equipment, Malaysia in electronics, and Vietnam, which has been one country that has had the highest rate of growth as far as trade is concerned since 2008. In a cumulative sense, from 2008 to 2018, Vietnam is a country that has had the largest gains, As far as pre-COVID picture is concerned, if you look at India, India is not among the top 10 countries, globally speaking, as far as export of manufacturers is concerned. And it's important here to see that these top 10 countries within which India is not there, there are 7 Asian developing countries as members of this top 10. 7 Asian countries, let me not say developing countries, but 7 Asian countries among these top 10. And these top 10 together contribute 80% of the global exports of manufacturers. So let us just see, that in this 80% of global exports of manufacturers, India is not participating in that top 10, that's contributing this 80%. India's participation in supply chains, which I said has the main mode of participation in global trade of major economies, has been very low. It has declined further since 2012 and onwards, more so 2013 to now. The sectors that we did participate to a certain extent, for example, textiles and clothing, automotives, these two have also declined. Electronics, India was always very marginal as far as our participation in these value chains was concerned. I'll come back to this, but just to highlight a bit, it is the backward integration in value chains, since you brought out the employment perspective, which in this case, and particularly in electronics, is highly labor intensive, So we've missed out that particular opportunity to be a part of the backward linkages as far as value chains in these sectors are concerned, India's sectors of growth have been chemicals, metals, metal-based, iron and steel, Just to point out one in this, these are of course not intensively value chain based, in terms of global value chain lead sectors, that is to say. Value chains of course exist in all sectors, but these are not the lead sectors, so to say. And as far as iron and steel is concerned, in the last couple of years, pre-COVID, this sector was actually undergoing a decline in terms of its share overall. The rate of growth as far as iron and steel exports is concerned was in a decline. Now, during COVID, what is it that we've seen? We've seen the trade recovery since Q3 as far as 2020, 2021 is concerned, consolidating further in the last quarter of 2020-21, and then having been carried forward in 2021-22 also, The recovery, however, has been highly uneven, both in terms of regions as well as sectors, with East Asia having led the process of recovery, goods trade having led the process of recovery, and as far as sectors are concerned, again, it's been, as far as top sectors are concerned, there was an increase in many of these, but the lead sectors again have been in terms of office machinery, even as far as textiles are concerned, given the importance as far as PPE and so on was concerned, So as far as these sectors are concerned, we did see office equipment, communication, machinery equipment, and textiles to be the lead sectors, If we look at it in terms of competitiveness, the indices that have been calculated globally, in terms of both export performance and market shares, India's competitiveness India has been a loser as far as competitiveness indices in apparel are concerned. And countries like Vietnam, Turkey, Cambodia, these have been the gainers, So we haven't really gained as far as one major sector in which we did participate in value chains early on, is concerned. In fact, we've lost share competitiveness. There is, in fact, among the top sectors, not a single sector where India gains in competitiveness. It's only in pharmaceutical that India is in the no change category. That is, we've neither lost nor have we gained as far as our export performance or market share is concerned. Overall percentage change as far as 2021 is concerned, these are the most recent numbers. The maximum positive change, this is in terms of total trade, so to say. The maximum positive change is for countries like China, Taiwan, Vietnam, in that order. These are the lead economies, COVID times, you see. Negative, India is, the only big positive that we can see in this is, that India is in the negative range in terms of having lost as far as total trade is concerned, but it's the lowest proportion, that is the lowest levels that we've lost in comparison with other economies that have also lost in terms of total trade. The gains that we've seen, in terms of exports, again, as we've been saying, this has made news almost throughout the COVID period that India has been gaining as far as exports are concerned, has been more in terms of energy, minerals, metals, where apart from the other things, there has been price effect that is a significant element of the increase as far as our performance is concerned, which, by the way, also adds to volatility. Apart from the fact that these are not the lead sectors as far as recovery is concerned, the issue also of volatility in terms of price having been a contributory element to export performance gets in here, As far as India's, these are the most recent numbers that I have, but even in case of most recent, we've got the lead sectors to be petroleum, chemicals, marine products, not really the major manufacturing categories, that we see internationally. As far as the lead sector participation is concerned, as far as other emerging markets are concerned, as I said, whether it is Vietnam, which has been the lead, of course, China earlier, leave out China because that's really a very big, and there is a huge amount of difference between China and the rest of the world. If we take any of the major economies, emerging market economies, the means to enter value chain or to increase their trade participation has really been trade policy that has taken care of three main elements. One, of course, is lowering of tariffs. World over, we've seen that the average tariffs, average applied MFN tariffs, have fallen to between 0 to 5%. India has undergone a reversal as far as its tariffs are concerned, and we've actually increased our tariffs. Just to kind of give you a quick idea, here, if you look at our average applied MFN tariffs in 2008, it was 9.8, has increased to 11.7 in 2019. Average applied tariff weighted means, which are weighted by import shares, have increased from 5.5 to 6.6. This is in comparison with, let me say, Vietnam, where the average applied MFN simple tariffs have declined from 9.9 to 8.8, and weighted means have declined from 5.6. This is significant to 1.4, So there's a huge difference as far as India's, performance as far as major indicator of tariffs is concerned in comparison with other economies that are moving ahead in their global trade, or even as far as their rates of growth of trade is concerned, This, as I said, if you do a comparison, we are way behind. The other is regulatory ease of doing business. And the third is a very significant one, which is FTA participation, In fact, in many economies, it has been seen, that both the lowering of tariffs as well as regulatory ease has been sought through participation in FTAs, because FTAs themselves have got advanced. Once tariffs have lowered, they're not really serving the purpose of only lowering tariffs. They're also serving the purpose of making policies, that is regulatory policies, simpler, only so that, commodities such as intermediate goods, which is really the core of supply chains, can flow across borders easily, simply, in a smooth fashion. That's become the task of FTAs, where we haven't really participated in these. In FTAs, of course, mega regionals has become the order of the day, which is the WTO plus FTAs, plus deals as far as the region is concerned, has been, of course, the RCEP. Much has been said and written about the RCEP, India withdrawing at the last minute. Last or final round of negotiations, we'd invested so much diplomatic capital. We still have, this is wishful thinking probably on my part, but we still have the observer status as far as RCEP is concerned. And I hope and wish that we can use it to the best possible way, in order to participate in the RCEP, even in a future date. We've been given a special concession. One, which is an unprecedented observer state, and two, entry without, the 18 months, which is valid in the other countries' cases, So we have an advantage, we should utilize that. The other CPTPP, of course, which is a much higher grade FTA or a comprehensive deal, which has higher standards, where China has applied. We know that other applications, Taiwan has applied, Vietnam is a member, so whether we can think of getting into this higher grade CPTPP, again, that would be a good idea, that would be something that's absolutely necessary and imperative if we can make the move towards that, The bilaterals, as far as India is concerned, India-Korea, as we have only in this, we've done these deals only in this region. India-Korea is under review. The review having started long back, I think 6 rounds have been done, but we haven't really gotten anywhere. India-ASEAN, where the review was announced in 2020, more than a year has passed. We haven't initiated the review as yet. So both these remain in suspension. The only CECA that we have at the moment is with Japan. None of the others really operate, but we have to remember that in most other cases, they're +1s with ASEAN, which is what we have in terms of with Japan, with ASEAN, etc., have now converged into the RCEP. And we are not a member of this 15 country collective agreement, My last point, that is our move towards early harvest deals that we are now undertaking, whether it is with Australia, UK, EU, these are all very limited in scope, and in comparison with where the world is going as far as higher standards, WTO plus is concerned, comprehensive coverage of trade, investment, services is concerned, we are looking at a deal which is far more limited in scope in terms of restricted sectors as far as goods are concerned, restricted services, probably. We are still stuck with mode 4. I have a very different opinion on that, but I'll come to that in details if required. And finally, we've already negotiated in the sense as far as EU is concerned or Australia is concerned, our negotiations with both for a wider scope FTA started an early last decade, 2012 in case of EU, as well as close to the same time as far as Australia is concerned, Now moving towards a smaller deal, doesn't make sense until and unless it graduates to an FTA. But having gone through the FTA process earlier, the negotiation process earlier, there's nothing that we've done, in order to say that those issues, which were great obstacles as far as the earlier period of negotiations are concerned, would be resolved automatically now, Now, when we've moved towards higher tariffs per se, that is average tariffs, also higher tariffs in some of the most significant sectors, both in terms of auto components as well as electronics, which, as I said, are core sectors, both in terms of recovery as well as trade growth in the last decade and a half. So I'll stop here and come back to some of these issues.
Thank you, Professor Batra, for this magisterial survey of India's trade scenario, and thank you for taking the time to give us this perspective. Is gloom. There's very little sort of hope. So I'm turning to Ambassador Kumar now to check out with him on WTO front how he looks at the multilateralism, how multilateral trade is doing, and does he also share that gloom in the WTO scenario or not? Ambassador Kumar.
Thank you very much, Chairman. And I too would like to compliment Professor Batra. That was quite a tour d'horizon, as the French would say. I largely agree with the conclusion, the inference I draw from Professor Batra. I mean, I will begin with that because I would like to take off from where she left. And then, of course, I will talk about WTO and FTAs if you allow me. But just to respond a little bit to Professor Batra, a lot of things that one really cannot disagree with. I mean, what she says is just raw statistics and raw facts, and you can have opinions, but you can't have two views on facts. So I don't have much to disagree with, except perhaps a couple of things. And maybe it's just the optimistic side of me. For example, on the tariff increase, countries have what is known as tariff slack. There is a difference between the bound tariff at the WTO and the applied tariff for every country. It is true that other countries have not been didn't have to increase it. In our case, all we have done is we have used that tariff slack. If we hadn't, by now your trading partners would have chewed you up alive. So let's not kid ourselves. I mean, we haven't gone beyond the bound tariff in any case. But yes, the trend seems to be lesser tariffs. I have a reasoning for it. We have very peculiar exports, pharmaceuticals, buffalo meat, tea, coffee. These are subject much more to regulatory obstacles than exporting shoes and undergarments and zippers and watches. Unfortunately, we've got us stuck with this kind of an export basket, which is much more subject to regulatory obstacles and non-tariff barriers. But the increase in tariffs, while I agree largely with everything that has been said, I also believe in a COVID year, the government needed revenues. After all, you were giving out 1 kilo of dal and 5 kilos of whatever for 850 million people. I mean, where do you get the money from? So that revenue considerations may have played a role. I'm not very sure about this, but there must have been some reason to therefore interpret it as purely protectionist. Maybe over-interpreting is all I'm saying. Maybe there was a bit of that. Because for example, if you look at the areas where they have increased the tariffs, kindly tell me which domestic industry were they trying to protect. I'd like to know. What domestic industry are you trying to protect? You may be trying to get revenue. So I would argue, and maybe we can have a small discussion on that. Maybe I'm wrong. I believe it was revenue considerations more than protectionist. And I also think towards the end of RCEP, the government of India genuinely felt that the base being used by RCEP people for diminution of traffic for tariffs was a completely different base here. And that became a big issue, frankly. They took the point at which our tariffs were the lowest. So anyway, there's so much for a very brief, but otherwise, as I said, the big conclusion I draw from Professor Batra's intervention is that we are fundamentally uncompetitive. That's all she's trying to say. Basically, our industry is not competitive compared to other countries, and that's a fact. So I have no quarrel with that. On the trend towards trade, if I can just add on, not to contradict anything that Professor Batra said, but I will add on two things. One is that the share of MFN trade is gradually diminishing in international trade. Trade is no longer done on the basis of MFN, it is done on the basis of FTA. I'm only adding to what she said, which is the trend is towards FTAs, the mega FTAs and so on. So the MFN trade is actually on a decline, and it is preferential trade which is actually the future. So from that point of view, also India has to look at FTAs. And that is a point on which I completely agree with Professor Batra. Whether RCEP or not is a different matter. And I'll talk about FTAs that we are going to do. But we need to do FTAs, there is no question. This also responds to your question, Mr. Chairman, about exports. The exports is not viable in the long term. You are right, because this is temporary. This increase in exports is because of pent-up trade post-COVID, and also because the prices of commodities and everything that we sell is very, very high. So your value of exports is showing up as a 50–60%. This is not viable in the medium to long term, in my view. So the first thing I would say is that MFN is on decline and FTA trade is on the ascendant. Second, and this is perhaps recent, what we are also seeing is a division between strategic trade and non-strategic trade. And to give you an example, semiconductor, active pharmaceutical ingredients, photovoltaic cells, personal protective equipment like masks and so on, these are strategic. These will not be subject to ordinary rules of trade. Your ordinary rules of trade will be your shoes and undergarments and your glasses and your watches and your suits and so on. They will be subject to ordinary rules of trade. But I think we are looking at a situation where countries are saying some products need to be treated differently, and they will be looked at strategically. I just gave an example of semiconductors. Telecom equipment is another of them. 5G, for example, being a classic example. So my question, therefore, is, given the situation that Professor Batra has painted, and with which I largely agree, can India now try and be part of at least this resilient supply chain by trying to produce strategic products and services using the production-linked incentive scheme and the good relations that we have, maybe with the United States, maybe with Quad partners, maybe with other partners? If they can trust us more than other trading partners, can India become the hub for strategic products and services? That is a question I pose, taking off from where Professor Batra left, which is that we will always be fundamentally uncompetitive to make Nike shoes and textiles and garments and shoes and etc. We will never be as competitive as ASEAN. So why not branch off into a different direction? And this area, I would even be ambitious and say, why not try to attract investment even to make semiconductors in India, if possible, So we look at strategic products and services which may not be subject to normal rules of trade because there is a resilient supply chain involved. The other two things which I have noticed, and we were in a different forum, Naushad and I, talking about the US-India thing, we have started talking to United States about labor standards and environment as part of trade. This is new because traditionally India has taken the view that both labor standards and environment are non-trade issues. But in the joint statement issued after the conversation between Ms. Tai, I think it's Catherine Tai, and Piyush Goyal, they have clearly said we had an exchange of views. Now, when a diplomat, I think I've been long enough in this business to know that when a joint statement says exchange of views, it's actually more than an exchange of views. Inclusion of an item in the agenda is an important step. You don't just meet and talk. These are done in advance. So I actually see this as a good step because, and I will now turn to FTAs, any FTA that we hope to achieve with UK, EU, cannot but have these two things. They will not agree with you on an FTA if you do not include sustainable development, environmental protection, and if you don't include labor standards. I would argue with labor standards, we don't have too much of a problem because it has union rights, it has forced labor, it has child labor. I would say perhaps the only issue we have is child labor, where we have laws in place, but they are not implemented. So that is an area which needs discussion, and we will have to see how we can couch it. In terms of sustainable development, there is no getting away from it. WTO discussions have also started on sustainable development. Every future FTA is going to have a chapter on sustainable development. I would urge your viewers and others who are interested to take a look at the EU-Vietnam FTA. It has a chapter on environment, which basically says whatever commitments Vietnam has taken in multilateral environmental agreements, they are bound by it. And the implication is, If Vietnam were to violate an obligation taken by it in a multilateral environmental agreement, there would be trade retaliation. So we will have to think also about this particular issue. But the fact is, we are thinking about it. We are talking to our partners about it. I take a slightly different view from RCEP, the views that have been expressed not just by Professor Batra, but by many, many people, that it is a missed opportunity and so on. Ex post facto, I feel that it may not be such a bad thing, because access to the China market appears to, I mean, not to kind of say that Ruchir Sharma is the last word, but he has written something on FT yesterday, which is very interesting, which is that already exports as a part of China's GDP is down from 35% to 20. And it is very clear to me China is moving inward, whether we like it or not. And if when China was outward looking, if we could not gain access to their market, I pose the question as to whether you can really do it with all their dual circulation economy and everything else that's going on there. So that's a question I just pose. Maybe it is my way of rationalizing the RCEP decision, but in any case, I consider it as the ship that has sailed. So I think it's better we look ahead. If you look ahead, we are looking at FTAs with Europe, UK, UAE, Israel, and there is a conversation with the United States that's going on, not an FTA, but a conversation. I would put EU ahead of everything else because it's $100 billion trade. They are the biggest trading entity, whichever way you look at it. I also think with EU, it will not be the same old whiskey. Whiskey is gone because UK is gone. Wines and automotive products will continue, but I think the bigger issues are going to be sustainable development, because the EU is already thinking of a carbon tax. So even from a self-interest point of view, to preempt this carbon border adjustment tax, I think India needs to have an FTA with EU. The only trouble is right now it will probably be India running after the EU, not the other way around. Whereas some years ago, the EU was keen to conclude it with India. But these things will keep changing and we will have to do what we can. On the FTA front, I would emphasize two things. And these are really logistical issues. We need manpower. I'm not sure we have the manpower to do 5 different FTAs, I've felt. The Commerce Ministry is not a very big ministry, frankly. So that is something that we have to look at. I also believe more use must be made of the government of India, not just CII, FICCI, but also think tanks, perhaps even academic institutions, to get inputs, frankly. There is no harm. Nobody is saying that Professor Batra or Mohan Kumar should negotiate on behalf of India. We are merely saying, make use of us, we are there. At least we'll give you inputs, because I know the situation in the government, it is very, very difficult. We don't have too many people. So that is something that I would emphasize. And looking at the WTO scenario, the last part of my intervention for now, there is a strong likelihood of the WTO meeting in March. That's what they're talking about. The services portion has already been finalized by the plurilateral participants. They have come out with an outcome document. Now, the strange thing is there is nothing there. I've gone through it. There is nothing there which should pose a problem for India. So I was wondering why India did not participate in that plurilateral to begin with. So, but it's okay because the outcome is what it is, and I don't think we would have a problem with it. What is going to happen in the WTO is, with or without India, you are going to effectively launch a new round of negotiations. That's what they're trying to do. They're trying to do that in trade and health. They're trying to do that in electronic commerce. They will try to do that also in agriculture. So there will be basically mandates for negotiations post-ministerial conference in March or July or whenever it happens. So for India, frankly, I think we will have to buck up and then start looking at participating in these negotiating groups. I have felt always that we have good negotiators. I don't know why we don't have confidence in them. We have done well, so we are actually better off participating in the negotiating group than staying outside. So some groups you may want to stay out, but at least the bulk of the negotiations that are launched in the WTO, I think we should be part of those negotiations. To come right back to where we began in terms of the future of trade and India's position in it, Three brief points. One of them is a repetition, which is that I genuinely think strategic products and services, India should take advantage of the current environment to put itself up as a candidate. This will, however, require very deep structural reforms domestically. I have my views on how easy those reforms are in the context of the withdrawal of the farm laws, but that is a discussion we can get into if you are so inclined. It's tough, but I think we should do it. That's the first. The second thing that India should try and do is in the area of digital trade. I genuinely believe India has an opportunity to conclude an agreement with the United States and establish a gold standard. If India cannot do a digital trade agreement, we call ourselves an IT superpower and we have so much at stake. If we can't do that, and if we are still going to keep saying it is localization, privacy, etc., those are important issues. So I'm saying resolve them. That's all I'm saying. You cannot walk away from a deal just because you have some difficult issues to pose. Okay, agriculture, I can understand. Farmers will be on the streets. Maybe steel, difficult. Maybe automotives, difficult because employment is at stake. But you should have no problem with digital. It's after all engineers who are working in Wipro and Infosys and so on. So why don't we at least take the bull by the horn when it comes to the digital area and try and be forward looking? Since we cannot anyway, as Professor Batra says, we can never make shoes and garments and other things as competitively as many of the people in Southeast Asia. But in the area of digital trade, I genuinely think we can establish a gold standard agreement with the US. We should do it with the US because with the EU, it will not be so difficult. Our data protection bill is actually very close to the GDPR of the EU. But I think in the area of digital trade, can we try to do something avant-garde with the United States? I'll stop here, Mr. Chairman, and happy to come back to some of the issues.
Thank you. Thank you. I think we'll have to come back to you for some of the clarifications that you need to give us on the digital trade in particular. But let me move on to Dr. Forbes. The general sense one may get is that Ambassador Kumar differed greatly with the views that were articulated by Professor Batra. But in general, I see that both of them agree that the Indian industry needs a greater dose of competitiveness. Now, can I come to you and ask you to present what needs to be done and where are we vis-a-vis liberalizing and making the Indian trade more competitive to take on this challenge that stares at us? Dr. Forbes.
Thank you, Ashok. And let me start by joining you in your comment on Amita's comments, which I agree entirely were magisterial and very, very informative and instructive. And Mohan, thank you also for your very thoughtful and perceptive comments. I'll come to the competitiveness question, and I'll lead up to it if I can by sort of three building blocks to get there. Start with the comments that Mohan made on free trade agreements and the general perception that seems to exist in industry, in India, and in the government too, is that our free trade agreements, we signed, I think, 11 free trade agreements in the 2000s, and that the general perception is that the free trade agreements haven't delivered. Indeed, the general perception is that they have actively harmed Indian industry. So based on that, we did some work actually in CI a couple of years ago where we looked at what the impact was. And what we did was we looked at, what's the objective of a free trade agreement? The objective of, you could argue that a free trade agreement has worked if the proportion of trade that you do with the country that you've got a free trade agreement with rises. So your share of imports from that country rises and your share of exports to that country rises. And the same for that country. If it works in both directions, then you could say that the free trade agreement has delivered in both respects. If it works in only one direction, then one of the two parties to the free trade agreement has benefited from the agreement. But but it's a proportion of trade argument that I think needs to be made to judge free trade agreements. So we looked at the 11 free trade agreements. We said, what's happened with our trade with the countries that we've signed these 11 free trade agreements with, which is, sort of ASEAN, South Korea, Japan, some countries in South Asia, and I think one country in Latin America. And I said, what's happened with those free trade agreements and our trading patterns? If you look at the numbers and you look at trade in 2000 and you look at trade in 2019 is the year that we compared. What do you find? You find that essentially the percentage of our imports and the percentage of our exports to that set of free trade countries was almost identical. It had changed by about 1%. So it was about 16% in 2000. It was about 17% in 2019, both imports and exports. So it actually hadn't changed. The share did not change. So in that sense, you can't really make the argument that free trade agreements have harmed Indian industry or have harmed India, but they haven't benefited us either because they've actually had very little impact. If you look at the countries where you've seen a big change in trade, we've seen a big increase in our imports, a share of imports from South Korea, not our share of exports to South Korea. We've seen a big increase in our imports from Vietnam, the point that Amita made. And we've seen a big increase, a huge increase in our share of imports from China, a country that we have no free trade agreement with. On the export side, we've seen a big increase in our share of exports and our share of imports into to Bangladesh, a country that we do have a free trade agreement, an agreement with, right? So if you look at what the results are, then it says, look, free trade agreements have actually had relatively little impact. A country that we have no free trade agreement with, China, is the country that we've seen the greatest increase in trade with. So how can you blame free trade agreements, especially our greatest increase in our share of imports? So how can you blame free trade agreements? Because we've got no free trade agreement with China, right? So what's then actually going on? And that's your point on industrial competitiveness. The countries that have actually increased their trade, not just with India, but with the world, are those really competitive countries. South Korea earlier on, but continuing into the 2000s and 2010s. China in the 2000s and 2010s, without question, increasing their share of trade with almost every country around the world, right? And Vietnam, increasing their share of trade with almost every country around the world. These are the amongst three most competitive countries worldwide. That's what's actually underlying their success in trade, right? And it's not a free trade issue, it's a free trade agreement issue, it's an industrial competitiveness issue. So very much in line with what you're saying. Second point, your question on exports. Will the boom sustain? No, the boom will not sustain, but growth should and can, yeah? And it relates to your second question, which is, can the composition of India's exports be improved? Now, what does improved mean? It means that our exports should move more and more to higher value-added goods, to goods where there is more proprietary technology, goods where you have more resilient long-term comparative advantage, goods where you also have higher growth opportunities in the long run worldwide. These, it seems to me, would be the way of saying that if we move in that direction, we move away from commodities to these kinds of higher value added goods, higher growth potential areas, then our export basket has improved. We participate in some of those markets. So pharmaceuticals is very much in that category. Software, by the way, it's not a good, but it's a service, very much in that category. Engineering products, very much in that category. Some limited play in project exports, very much in that category, right? So those fit with that basket of sort of higher value added, more attractive export goods. What you look at though is exactly as you pointed out, where we've seen big increases in exports this year is of refined oil, steel, minerals to some extent, cut diamonds, a bunch of areas where, okay, cut diamonds, some value addition, steel, some value addition, but they built around less long-term, robust, attractive markets, it seems to me. Third point, is the question of how do we actually build a constituency for trade liberalization within Indian industry? When we, in the run-up to RCEP, in CI, we organized a whole set of discussions with different industry segments. I think with 5 or 6 industry segments. And with all the segments, we said, listen, give us arguments that back up India's offensive interests in trade. Meaning, what is our interest in accessing RCEP markets? We have lots of information on defending the Indian market. So we have lots and lots of arguments there, lots of cases a strong case that's been made. Give us arguments backing our offensive interests. And almost without exception, what we got was more arguments in favor of our defensive interests, right? So we were a bit disappointed because we really need to be able to articulate what our actual offensive interests are in trade worldwide, and particularly in the RCEP markets that are so attractive. We did a poll about 7 or 8 months ago among some of the leading, some of the leading industrialists in the country. And the poll was on, were we right to drop out of RCEP? And the results were very interesting. The results said that 57% said it was wrong for us to drop out of RCEP. We should have joined RCEP. 27% said we were right to drop out of RCEP. So the people who we hear in industry, here's my reading of this. The people who we hear are the ones who want protection, the ones who want protection from imports and don't have that much interest in export markets. The people who we don't hear are actually the ones who are perfectly successfully doing business in international markets and operating overseas. And so to come back to your question again on competitiveness, I think it's a mixed picture. It always is in India. The famous Joan Robinson comment, right? That whatever you say about India, the opposite is also true. Yeah. That if you talk about a lack of competitiveness across Indian industry, you will find firms in those very same sectors that are very competitive, very successful doing business all around the world in the most competitive markets in the world. You will find firms exporting very successfully to China. You will find firms exporting very successfully to Germany, and so on and so forth. And it's an issue of differences between firms, not so much sectors any longer, but between firms that are competitive and firms that are less competitive. And the firms that have invested in technology, the firms that have invested in export markets, the firms that have established a base, a selling network overseas, these are the firms that I think we should increasingly see as our future. So to close then with the last comment on the PLI scheme that was referred to earlier on, I share the concern that you've expressed in the past, Ashok, on that of following a discretionary policy such as PLI, where one is essentially picking winners. One is attempting to pick winners. One is attempting to say that, listen, these are the sectors, products, etc., where we should subsidize production of these items, and we should subsidize them, maybe even protect them while we're subsidizing them, in the hope that we will become more competitive there. Now,
and spend 2 lakh crore on that.
And yes, spend 2 lakh crore. It's not a small number. It's about 1% of GDP over this 5-year period. Yeah, and it's a large subsidy. Instead of that, if we take that 2 lakh crore and use it to make it cheaper for all Indian industry to do business. So invest in logistics, invest in infrastructure, invest in all those things that will make us more competitive as Indian industry instead of as individual firms and sectors. It seems to be, it would be money better spent.
Okay.
So I think the way in which we should achieve that competitiveness is through not a targeted sector by sector or product by product policy, but instead something that enhances competitiveness across all industry. The best way of ensuring that you're competitive is if you have low tariffs. The best way of ensuring that you're competitive and can participate in supply chains is if you have to actually compete with firms with zero tariffs, because that's the test at the end of the day of whether one is competitive or not.
Thank you. Thank you very much, Dr. Forbes, for not only answering my question, but also covering areas that needed to be covered. Let me quickly have Q&A session with my panelists, and I will start with Professor Batra. Professor Batra, there are two questions that really struck me. One was this India or Indian exporters or Indian industry having lost the race in finding, slots in the global supply chains. Now, my question on that is, what do you think as an expert, what do you think that needs to be done to facilitate that Indian industries getting themselves plugged into the supply chains? That's number one. Number two, you expressed the hope that RCEP is still not gone. What do you think that needs to be done to revive the chances of India's becoming an RCEP member? Because you do realize that India's reluctance to get into any global framework where China is present is there. And number three, if you would like to respond to Ambassador Kumar's points, some of the points, particularly the one on the tariff, the protectionism points. So these are the three quick questions, and it will be nice if you could respond to any other issue that you would like to cover. Professor Batra.
Yeah. Thank you. I would like to respond to, I think, a couple of points that Ambassador Mohan Kumar made, and also a point that Naushad made later, about both FTAs as well as South Korea, China, and Vietnam, the examples that he picked up. First is, I think the arguments that have been given by Ambassador Kumar in terms of bound tariff, in terms of base year tariff and revenue being the objective as far as tariffs is concerned is completely protectionist. I mean, there cannot be another argument, or there cannot be another way of saying that if you're talking about the gap between the applied and the bound, at the WTO, and saying that India is perfectly justified to use that in order to increase its tariffs, there cannot be a more protectionist argument than that. We all know that India has some of the highest bound tariffs across the world. This is particularly so as far as agriculture is concerned. Agriculture, just to give you an example, is a protected sector across the world. I mean, we find that agriculture is among the most sensitive commodities, sensitive list, negative list as far as all FTAs are concerned. So it's a difficult to negotiate and protected across the world. India is the only one, where fruits and vegetables, or India is probably among the very few countries that holds fruits and vegetables bound tariff to be above 100%, as compared to, say, other countries, Southeast Asian countries, many of them specializing in some fruits and vegetables, having them as their comparative advantage, not more than 60%, So India is almost double as far as bound tariffs are concerned. This is a criticism that we've heard since the 1980s as far as India is concerned, 80s, 90s, post-liberalization, when we started to reduce our tariffs in the country, that bound tariffs were kept high in order to provide the government with the space to change or increase as and when it wanted. It adds uncertainty to trade policy, and it adds uncertainty as far as the traders across the world are concerned. Trade as such, trade policy should avoid a huge gap as far as applied and bound is concerned, So that's one. Two, revenue collection. This is a 1980s argument, This is a pre-liberalization argument to say that you need tariffs to collect revenue, As far as the government is concerned, it has to have other sources rather than protecting or using a protectionist instrument to collect revenue for itself, As far as base year is concerned, the same argument that we do not want lower tariffs to be the base year, rather we want higher tariff year to be the base year for RCEP, simply because again, we are acting protectionist, So these are all protectionist arguments, not for a liberalized, if you want to be competitive, these are not the arguments that we can use, Two, there is a misconception that we all have in understanding RCEP, when we say, is China the market? We haven't been able to penetrate and so on. We have to understand that RCEP is not just giving you access to a market. RCEP gives you access to a collective in terms of, investment. You will be able to attract investment if you're a member of the RCEP, because you become part of what has now come to be, the most significant outcome of the RCEP is that they have common rules of origin, which make this participation or which consolidate, the value chains as far as Southeast Asia is concerned. Had India become a member of the RCEP, it is this common rules of origin that would have given India the advantage of attracting investment that would then have catered to the rest of the world, to the region, to the collective large market, and this investment would not have been driven by what it is now, the Samsungs and the Foxcons, all of that we tout about, you see, today. This is only for the Indian market, whereas otherwise you would have got investment with a better technology that would have invested, or that would have come with export orientation as its objective, So one needs to understand these finer aspects and nuances as far as the RCEP is concerned in terms of what it has really achieved and what it would have given us, Combining the other question that you brought in here, in terms of what we need to do, I think we really need to use our observer status better in order to see how it progresses, how the RCEP is progressing, what are the kind of, how is it that these countries are negotiating further in order to, move further as far as the RCEP implementation is concerned. Also, there have been many flexibilities that have been granted to some of the countries in the RCEP, If we could utilize those flexibilities to delineate flexibilities and parallel tracks for ourselves, maybe we would have a more, relaxed or flexible RCEP also, we could make an entry through that kind of a route, I think that's something that we really need to think hard about, because this is the most dynamic region. We cannot let it slip by, even if we think of, getting into FTAs with the EU, UK, etc. UK, by the way, has registered the largest drop in total trade during the COVID period, So we have to kind of balance things out in terms of where trade dynamism, economic dynamism really lies for us to look forward to, As far as the question on PLIs, and I think I'll combine it with the other question that Ambassador Kumar asked, in terms of where is it, which sectors are the ones where tariffs have increased? Electronics, mobile handsets, just look at it, the way the input tariffs have been increased in this particular sector, combined with this being one of the first under PLI, it's the foremost example that you have of a protectionist regime that's being offered under the PLI, You're combining subsidy with higher tariffs, You're going back to the old ages of where protecting the domestic industry and then asking them to build complete supply chains. That's what we are aiming at by higher tariffs on inputs, So that's not the way to go about it. That's exactly what I meant when I said that the world trade context has changed, And that's where I take in the other question that Naushad has raised, in terms of giving examples, South Korea, Vietnam, and third, I think, was China, was it? Sorry? You're on mute.
Exactly. South Korea, Vietnam, and China.
Yeah, let me tell you, South Korea built complete supply chains, but that's the era of the 1970s, late 1970s, early 1980s, There have been revolutionary changes after that, in terms of communication, technology, transportation, everything that has made this in tasks production, fragmented production much easier, which is where China is the prime example. It's the factory of the world. For you to say that we don't have an FTA with China, but we trade, it's the factory of the world. It produces everything, it assembles everything, Every country trades with China, FTA, no FTA, etc. When you say Vietnam, Vietnam is the foremost example of the number of FTAs that it has undertaken to undertake or to implement the kind of reforms that are absolutely necessary to become part of the value chains, And let me also add here, that we need to understand Vietnam is not all about just Vietnam, Vietnam has a lot to do about Korean investment. Majorly what is happening in Vietnam, it's Korean investment, And Korea is investing not just in terms of, the basic investment, but also in terms of training the workforce. Other kinds of aspects as far as production in Vietnam is concerned. Vietnam, mind it, has nothing of its own in terms of trained labor force, managerial, professional labor force. We have all those advantages, But Vietnam has done other kinds of changes, through FTAs, preferential tariffs, lower tariffs, zero tariffs in the most important sectors, electronics. So the Korean investment in Vietnam, hence Vietnam exporting everything, that's so significant and registering the maximum rates of growth today, as far as trade participation is concerned. Another aspect, that question that, another point that Ambassador Mohan Kumar raised, which is about the world is not doing trade according to, it's not MFN trade, but preferential trade, Let me tell you, statistics don't say this, Statistics say that it's less than 20% of global trade that happens on preferential basis. And why is that so? Because MFN tariffs are less than 5% today. You don't need FTAs, preferential tariffs anymore. And FTAs, please, are not about tariffs. FTAs are about regulatory policies. So world trade is not all preferential trade. Yes, FTAs have increased in number, but this is not to bring down tariffs because tariffs are low already across the world, So we need to understand, what is it that FTAs are really doing? We really need to take part in this because these necessitate the kind of changes that then make industry competitive, You create the atmosphere to liberalize necessarily because you've committed yourself to reforms under the FTA, That's the job of an FTA. What Naushad said, about FTAs have not done us any good, they've not done us any harm. I have my doubts about the manner in which these studies are conducted. Forgive me for this, but as far as FTA assessment is concerned, you have to see whether the export increase, decrease that is being studied, is it in terms of utilization of FTAs? Have they been utilized at all? Data for that is very hard to come by through the customs authorities, So I don't know how much of that is really taken into account, but that's where the core of FTA lies, in terms of FTA utilization. Have we had high enough rates, Finally, I think I have covered just about everything that.
The question on supply chains. What are your thoughts on what should we do to?
Well, as I said, supply chains we need to really have, in terms of we need to get into FTAs, in order to be able to make the kind of reforms that are absolutely necessary. Two, lowering of tariffs. That is a prerequisite when we talk about participation in supply chains, because you have to have lower tariffs and allow inputs to come in, Inputs then need to be exported, So it's a mutual thing as far as tariff lowering is concerned. It's a prerequisite to trading, to getting into trade participation globally and value chain participation as well, One more aspect that slips my mind at the moment as far as supply chains is concerned, but I'll come back to it if I,
Sure. Sure. Thank you very much, Professor Batra. Let me turn to Ambassador Kumar. And, I was quite excited about your talk on the need to get into the digital trade front. And how do you think that India can take advantage of the strategic trade that you were talking about? Could you sort of, elaborate on that digital trade front and the strategic trade and on any other issue that you would like to throw some more light on?
Sure. I'm happy to do that, but let me at least react to Batra's comments on my comments. FTA trade being 20%, I would strongly contest that. And I can wage my entire trade policy career, it cannot be. Just the EU number of FTAs they've done, it cannot be 20%. It may be 50%, it may be 60%. I only said it is going to dominate. It cannot be 20% by definition, but we can have a quarrel on that maybe outside of the meeting. So it just cannot be 20%. That is not my understanding at all. You can go by WTO statistics and there are 364 FTAs People can't be concluding FTAs for the kick of it. There is a reason why Vietnam has an FTA with EU. It cannot be 20% of global trade. That much I'm sure. On the customs duty, that is the tariff decrease and increase. First of all, I mean, okay, if you call it protectionist, I only said it can also be protectionist, but there is no need to look down on countries which want revenue. That is why you have a bound tariff and an applied tariff. I don't see what is illegal about it. Why did your trading partners allow you slack? They allow you tariff slack so that you can increase it. Now, whether you want to look upon it as something which leads you not to competitiveness, but leads you to be uncompetitive is something I would agree. I have no problem with it. I was merely trying to justify why the government did what they did, that's all. But I'm not a huge fan of only relying on tariffs. The only point I would make, Professor Batra, is that many countries rely on non-tariff barriers. It is a fact that the ASEANs are masters at it compared to India. They are no angels when it comes to free trade. It is unfortunate that FTAs don't cover non-tariff barriers. You know that as well as I do. They don't cover non-tariff barriers. For example, when we sign an FTA with ASEAN and I want to export pharmaceutical products, I believe there must be a binding commitment by ASEAN that approval will be given in 1 month. What's wrong with that? How do I export pharmaceutical products if you're going to take 6 months over an approval? Similarly, buffalo meat. I think there needs to be an inclusion of sanitary standards, technical barriers, and marketing approvals. Because as I said, we are stuck. Unfortunately, everything that India exports, including Mode 4, is subject to regulatory standards. That is just the way it is. So I think I would make that point. But to come back to the main question you asked me, Mr. Chairman, on digital, there are basically 3 issues which are outstanding in India's discussion with EU and the United States. India needs to get what is known as a data secure status. That is, we need to be known as a country which can keep data safe and secure. In order to do that, there are 3 issues. One is a moratorium on taxes on electronic transmissions. That is a serious difference of view between India in the WTO and the EU and the US. They say that this moratorium should continue indefinitely. My view is this problem of moratorium has been resolved now by the OECD minimum tax. Therefore, India and the United States have agreed that India's imposition of an equivalent levy of 2% on all electronic transmissions or digital trade, that has been resolved through a roadmap that India and the United States have agreed. So I think the moratorium issue at least can be set aside. 2 other issues. One is the matter of privacy, and that is pending before a select committee of the Parliament. I believe we should really try to get this bill passed in this session that is currently ongoing. I hope we can do it. That bill is very close to the European General Data Regulation Bill that they have already passed. Now, the only thing is our activists and civil society groups feel that the definition of what is known as sensitive data is too broad and government has too many exceptions to it. Everything that is possessed by the government apparently is a carve out. So we need to do something about that. And I would suggest we look at the European Union bill or the European Union law so that we at least have a good global standard. That leaves only one big issue between the India and United States, which is why I'm so keen that US and India must have some kind of a digital agreement, which is localization, which is, we are saying that anything which is sensitive critical data must be housed in servers in India, that they cannot be housed in at Mark Zuckerberg's entity in California. Basically, that's what we are saying. If we are saying that, my view is let us try to keep it to a bare minimum and ask for mirroring of data outside so that it can be kept in both places, United States and India. And if we want, we can have access to it. But this seems to be really the only stumbling block between India and the US. Considering Google is planning to invest billions of dollars in India, considering we want other companies from Silicon Valley to come to India, I feel the time is right. And in any case, some concessions will be necessary. it cannot be our approach that we will do a deal with EU, US without giving any concessions or that's not on. So we have to make a compromise somewhere. I feel that the problems associated with our agriculture, with our steel industry, with our automobile industry are not the ones which plague our digital industry or IT industry. I think this is an area where we can afford to be bold and make a compromise so that with United States, at least we have a good gold standard digital agreement, which will of course be applicable mutandis with EU. And the data secure status that India wants, we want it quite badly. Otherwise, our software exports and IT exports will suffer in the medium term. So I'll stop here.
Thank you, Ambassador Kumar, for this detailed response. Let me turn to Dr. Forbes, and you gave us a peek into the way that study was done within the industry group on 57% and 27%, and 27% becoming more loud. Do you see, any scope for, a greater industry thinking, industry rethinking, and industry lobbies look inside and reach a kind of the status which it was obtained in the 1990s, where industry becomes the chief proponent of these reforms, which I think more or less we all agree that the country needs. So what should be the path ahead from an industry point of view to tackle these very, very important challenges for making trade benefit the Indian economy in general? And if you want to weigh in on any of the other issues that Professor Batra and Ambassador Kumar have raised, please do so. Dr. Forbes.
I think I'll try to address your question, Ashok. I think the way to do it is by looking at different sectors in India. I would say that there are sort of three types of firms rather than sectors. You have some firms that are very inward looking, that only do business in India. And they're the ones who largely ask for protection. You have others who are largely Indian oriented because they've built very successful businesses, say our financial services firms, for example, right? But they're focused on the Indian market because the Indian market is so large. So they're still focused entirely on the Indian market. And then you've got firms that are increasingly international and quite actively trading overseas. That last group, I think, is the most immediate constituency in favor of trade liberalization, of reduced tariffs, etc. But I think it'll actually require a greater participation in the value chains that Amita talked about. Because the key, if you're making, as say we do, engineering products, but we process most of what we buy ourselves, right? Now, what makes us less competitive is if you have tariffs, for example, on steel, and we pay more for our castings and forgings that are made out of steel because of this tariff on steel. Yes, it hurts us and it makes us less competitive as a company. But it probably doesn't determine our success. It's when you participate in value chains with very small pieces of, what Amita used the nice term, she used tasks, that if your focus is on adding value through specific tasks in the broader value chain, and you participate in those value chains in a widespread way, then you build a constituency for reform and you build a constituency for FTAs and for zero tariffs. Because if you have any kind of friction in those value chains, it falls apart. That, I think, has been our challenge in certain sectors of garments. That is certainly our challenge in electronics, where products move around, or sub-assemblies move all around Asia, collecting little bits of value along the way. And you end up with the finished product made somewhere else. Yeah. So I think participating in those value chains can build a greater constituency for reform. But we have certain firms, Bajaj Auto, Aarti Industries and Chemicals, a whole bunch of specialty chemical companies actually that are very successful exporters, do business all around the world, but they're not, I would say, active participants in value chains. They're much more. They're a supplier of intermediate chemicals or a supplier of raw materials or whatever to another to companies worldwide. The second category of firms, I think they're the second potential constituency for FTAs and for participation and for zero tariffs, because at some point in time, the Indian market is going to become too small even for them. For an HDFC, for a Bajaj Finance, for any of these leading financial services firms, that at some point in time, the Indian market, large as it is going to be too small even for them. And I think that's when one will start saying, hey, listen, then we want a market that's 8 times our size, like RCEP. We want a market that's much bigger. The first category, I think, is the last group that will actually become a constituency in favor of trade reform and of liberalization. I would start with the third, go to the second, and then finally end up with the first.
Sorry. Thank you, Dr. Forbes, for giving this detailed response to the questions. I think we are so engrossed with this, the discussion, that I sort of didn't realize that we are coming close to the session, but we have got lots of questions that have come from our viewers and audience. So I will not get into another round of Q&A, but I will ask Professor Batra first to respond to a question asked of her, actually, that what does she think of Make in India for the global market, and what's your analytical view on it with respect to your opening statement? Professor Batra?
Yeah, quick to the, the last point that I had missed out earlier, what do we do about entering into supply chains? One, the very important aspect, that is meant, that's come through from various studies that have been done for countries that are participating in value chains is the proximity to a hub, And as I pointed out to begin with, there is this Western European, North American, those are all tied up, Here we have the proximity to the Asian hub, the East Asian hub, So in that sense too, RCEP becomes a very, very significant instrument for us to integrate into the regional value chains, And regional value chains become more and more, will be becoming, they become more important post the US-China trade war. And they're becoming even more important during and after the pandemic, one expects them to be, So in that sense, the regional context is very important even for us to participate to a greater extent in the value chains, That connectivity with a hub is essential, Two, coming back to Professor Mohan, to Ambassador Mohan Kumar, you don't need to stake your career over this 20% and 5% and so on. But let me just tell you that when I said 0 to 5, when I said 0 to 5%, when I say MFN tariffs are already down to 0 to 5%, FTAs are not done simply for the kick of it, but FTAs today have acquired a very different character, They're not being done to reduce tariffs because tariffs are already low, That's what I say when I say that it's not preferential tariffs that is undertaken, as far as FTA design is concerned. It's more about regulatory policies. Those have become more important given the fact that the tariffs are already low, be that through the multilateral process, which was done long back, or through preferential. But this is all done and dusted with, we can't go back to now talking about this tariff business, and we must lower our own tariffs. World over, they are very low, and it's a big inhibitor as far as India's participation in trade is concerned, which is what also brings me to answer this question, where we say, what about Make in India? Make in India, a very, very laudable objective for us, we must, but Make in India should not mean that we make in India through protectionist means, We have to do it by being competitive and being out in the open, exposed, in the sense, expose our industry to greater competition and use the instruments that are being used by the other countries to increase their participation. Everybody today is talking about, make in America first, make in India. Everybody's turning to a bit inwards, but that doesn't mean that trade is going to be reduced by any chance, even when we do talk about deglobalization, which have become these buzzwords of the day, deglobalization, decoupling, all of this shorter value chains and so on. None of this really means that trade per se in terms of significance is going to fall, So we have to trade. So make in India to be able to trade, export to the rest of the world, which is going to happen only if we become competitive, not behind high tariff walls, So it has to be in terms of greater competition, make in India, but do it in hand, joining hands with the rest of the world. We can't do it otherwise, is my take on it. So supply chain, participation, and necessary reforms internal that are required for it on the tariff front, I think are absolutely essential inputs for that,
Thank you. Thank you, Professor Batra. Let me turn to Ambassador Kumar. There's a question for you, Ambassador Kumar, which says that, India has many investment treaties and that has led to the courts, court of law. And the government has been appealing against those verdicts, even though it has gone against us in a court of law. I think the questioner is referring to BPAS. Now, what is the way out of it, and how do you respond to this? Because these investment protection treaty, they do come in the way of more intensive relationship between two countries on trade as well as investment. So do you have anything to explain or anything to say that what needs to be done in this area?
So the fact is that we have lost virtually every single arbitration case. This is an open secret. Sure. This is what led us to put forward a model bilateral investment treaty, BIT, in 2016. I regret to say there are absolutely no takers for it because it has a provision which says that you have to exhaust domestic remedies in India first before going to international arbitration. I dare say no sane investor today will exhaust domestic remedies in India because before that he will be exhausted. So obviously he's not going to do it. So we have now embarked on an investment negotiation with European Union on a standalone investment treaty because the European Union did not want to combine the FTA with investment. They said, no, separate it. In India, it's also done by the finance ministry, by the way, whereas the FTA is done by the commerce ministry. So I think we will have to wait and see what kind of an investment outcome we have with EU, which will then become India's model investment. This BIT 2016 is dead, in my view. There are no takers. The way out, I mean, there is only one provision which is controversial, which is really the investor-state dispute settlement, which has been controversial everywhere, even in Europe. I think the way out is to have a permanent court of arbitration in UNCITRAL, for example. And there are some talks that this can happen. This would be India's ideal perspective because then nobody can question the permanent court. Right now, you're questioning it because the individual arbitrators are from the West. And therefore, we say that everybody is aligned against India, so we are losing all the cases and all that, which is not true, actually. But I think once you have a permanent court, especially associated with UNCITRAL, I think then it becomes easier for India. So I would say that the answer lies in the outcome of the investment standalone agreement that India is currently negotiating with EU.
Thank you, Ambassador Kumar. Let me turn to Dr. Forbes and ask this question which has come from Vinod Kumar, who says that is the Indian industry getting environmentally ready to deal with EU's impending policy rule on CBAT to avoid penalization on export of grey products? What would you say, Dr. Forbes?
I must admit that I do not know what CBAT is, but let me say what I think if you look at firms that are actively exporting today, they directly deal with environmental issues and environmental standards. Again, I think they sort of fall into two categories. There are firms that wish to comply and there are firms that are trying to be ahead of the regulations in terms of actually saying what's the future expected regulation, how can we actually go to zero discharge plants and so on, because it's simply good practice and a good thing to do. So I think you have, again, the full range of firms. I think broadly speaking, you would see increasing interest in compliance with environmental standards, increasing interest in not only compliance, but going ahead of environmental standards with the sustainability development goals that many firms have now signed up to and subscribed to. And you see some also now following these standards of reporting, of global environmental reporting, which I think is again driving a lot of these changes. I think there's quite a fair amount. There's a fair amount of progress underway now. I don't see it as a big issue actually in terms of exports and trade.
Okay, thank you, Dr. Forbes. We have come to almost the end of this meeting, but I will not let my panelists go without answering one question each of them, and which is that we have come to realize that trade policy is decided in different bhavans of New Delhi. As Ambassador Kumar pointed out, trade policy is decided in Udyog Bhavan, and the tariffs are decided in North Block, and the overall trade policy is decided in South Block. Now, is it time to come, has the time come where we need a centralized body like the US system, where there is a chief trade negotiator, which is an empowered person, has like in the climate negotiator? Is that time come to have this kind of organizational restructuring? Give me a brief answer, starting with Professor Batra.
I would say yes, and not just an individual, but I would say there is a need to have an institution that's devoted to trade, that's absolutely essential. And I think, to say that time has come, I think it's a little late in the day, but we must start whenever we realize, because other countries, whether we look at Australia, Japan, many of the Southeast Asian countries, where trade is very significant, I think they've combined their foreign affairs and trade ministries, Trade is paramount, as far as foreign affairs is concerned. And we haven't, in the last 4 or 5 years, we've seen trade to have become a strategic instrument today, as one of the foremost instruments of foreign policy, So I think devoted institution, devoted individuals, as far as trade policy making is concerned, it's absolutely essential and need of the hour.
Okay. Ambassador Kumar, with your 40 years of policy making experience, would you differ with Professor Batra?
No, I agree with her. The only problem is it'll never happen. It'll never happen because the turf thing is so strong, and she knows it. Probably I know it a little bit more because I served in the government. No, so my pragmatic, I completely agree with her. I think any sensible country will actually have foreign affairs and trade together. That should be the primary goal. Of course, it goes without saying. But in our system, it will not happen. So my second and perhaps the second best alternative is to really get people to join the Ministry of Commerce as lateral consultants. That's the only way, frankly. This cannot be, I'm sorry to sound a little bit blunt, but you cannot expect that a district magistrate of Jhumri Talaya will come to Delhi Trade Policy Division and become an expert on trade policy overnight. So unfortunately or fortunately, that's the system we have today. I'm exaggerating, obviously.
Sure.
The Commerce Ministry has put in place some consideration, but I think we need a lot more people to do this. So ideal situation, I agree with the Professor Batra, but my pragmatic solution for the time being will be get at least more people from outside. And what is the problem in taking people? No, the MEA has done that. We've taken so many people. One of my students is now a consultant in MEA. He did not make it to the Foreign Service, but he said, sir, at least let me work in MEA. And they're doing a great job. And we don't give them ambassadorial postings outside. So nobody who works in the Commerce Ministry as a lateral consultant is going to become Commerce Secretary. Nobody's asking for that. So if you actually depute people, that would, I think, greatly help. But I think the line of command should be clear, because in the Indian system, the Prime Minister's office will have the last word. Some of these decisions are so political, frankly, that trade will become less important and it will become so political. Only the Prime Minister's office, to the best of my understanding, he is the one who can take the flak. After all, we know that that the RCEP decision was ultimately a prime ministerial decision, because the Commerce Ministry was actually negotiating till the last minute. This is known. So I think that line of command you cannot change. Thank you.
Yeah. Dr. Forbes, would you disagree with either of them?
No, I'll say yes and yes. So I think, as Amita said, yes, we should have something, a unitary approach. And as Mohan said, it's difficult to see that actually happening. But I fully agree that we should bring in specialists from the outside. And what we need is, if you ask me, more than anything else, is institutional deepening. We need actually experienced, skilled trade negotiators, people who specialize in different areas. You know, for example, the whole point on digital. The reason that India is, if you ask me, my opinion, the reason that we're blocking a lot of discussion on digital issues is not because we are against it. It's because we haven't made up our mind what our position is. It's because we don't know what we want. If you talk to the WTO Director General, she will tell you that what is India's position? What is India's ask? India doesn't have an ask. So, you know, and I think that can only develop if we have good, thorough institutional deepening. Whether if that institutional deepening can happen in one place, so much the better. But otherwise, it should happen in 3 places. Let it happen in the Commerce Ministry, let it happen in the Finance Ministry, and let it happen in Foreign Affairs.
Thank you, Dr. Forbes. You know, it's very difficult to sum up a rich discussion like this in a few minutes. I don't want to do that, but I wanted to, tell you and the audience that when we began this meeting, we were a little disappointed, and we were actually worried that too many like-minded people are on this panel, and we may not have a proper discussion. But I think this is one of those Ananta Center discussion that I immensely enjoyed because of the rich variety of discussion and debate. And even if we differed at some points, I think it enriched and enhanced the cause of policy making. So I hope the government is listening to us. So with these words, let me hand it back to Ananya. Ananya, all yours. I think we have to close the session.
Yeah.
Thank you very much, Professor Batra, Ambassador Kumar, and Dr. Forbes for taking part and being so patient with me. Thank you.
Thank you all.
Thank you.
Thank you very much, everyone, for this wonderful session. It was indeed a very great session with much robust discussions, and I'm very glad that we were able to do this. Thank you, everyone.
Bye-bye.
Thank you.
Bye.
Thank you.
Bye.
Thank you.